Hello and welcome to Gold Signals. This is going to be a tutorial video on how to follow our signals. So if you've ever wondered what a trading signal actually is, and more importantly, how you can use it to better your trades, in this short video, I'm going to break down exactly what a trading signal is, how to read it, and how you can start following our signals step by step to improve your results in the gold market. Stay with me because it's a lot simpler than you think. A trading signal is basically a trigger or alert that tells you when to buy or sell a particular asset, in our case, gold. Think of it as a heads up from our experienced analysts or systems designed to spot profitable opportunities. Our signals and most signals include 4 key components that you need to know. Number 1 being our entry price. This is the price point where you should enter the trade. 2, stop loss. This price protects your capital by automatically closing your trade if the market moves against you. Take profit. This is the target price where you lock in your profit. And 4, buy or sell direction. It tells you whether to go long, buy, or go short, sell. So when you see a signal like this, you'll know exactly what action to take and where to set your key levels. How do you actually use these signals to make trades? Let me show you a simple step-by-step process. Starting off with the most important step before entering a trade is working out your risk management. So we're using this application called Stinu. However, you can go online and find yourself a free online risk calculator that will allow you to enter the key data that you need and give you the amount in lot size that you should be using. So we're going to go ahead and go over to our trading account and look at our balance. Our balance is $10,000 US. So we're going to go ahead and enter our balance of $10,000 US. For our risk, we recommend you to risk 1 to 2% per trade. For this example, we're going to keep it at 1%. So we enter 1 on the risk. For stop loss, we want to work out the number of pips from the distance of the entry price to the stop loss. For example, if the entry price is 2,500 and the stop loss is 2,490, the distance between the stop loss and the entry is 100 pips. So let's say we want to enter 100 pips. Then we want to go ahead and click calculate. And we want to go ahead and enter our currency pair. In this instance being gold, which is XAU crossed with US dollar. We're going to click calculate and it will give us the recommended lot size for us to risk 1% on this entire trade. It is recommending us to risk a 0.1 lot. So here we are. Our signal has come through. We're going to go ahead and click on our VIP channel and we're going to go ahead and read the signal. As we understand, we have our entry, our take profits and our stop loss and the direction of the signal. We're going to go ahead and go over to our MetaTrader. We're going to go ahead and find our gold and we're going to click trade. We remember that the recommended risk was 0.1 lots. We recommend to open as many positions as there are take profits. In this case, there are 3. So we're going to divide the amount of lots that it has recommended to us by 3, roughly giving us an entry with each lot of 0.03. The entry price is exactly where we enter the market, as this is a market execution. There is different types of trades. However, most of our signals will come as a market execution. So entry price isn't too important. The most important thing is to enter the signal upon it has been sent. We're going to go ahead and enter our stop loss. We're going to go and look at our trade and find that the stop loss price is 2702. So we're going to go ahead and mark in 2702. Our take profit 1 is 2715. Our deviation, we're going to keep that at 0. This is all the information you need. And we're going to go ahead now and find the direction, which is long, and that means buy. So we're going to go ahead and click buy. That's our first trade done. As you can see, we are now entered into the market. We're going to go ahead and do the exact same thing with the exact same amount of risk and do our second take profit. So with the stop loss at 2702, our take profit at 215 and our deviation at 0. Again, the direction of this trade is long, therefore we're going to click buy. Again, now we are in for 2 trades, 2 positions, my bad, and we're going to go ahead and enter our third position. Again, following the exact same stops with our stop loss at 2702 and our final take profit is 2720. We're going to go ahead and set our deviation to 0 and we're going to click buy. So there we are entered into the signal that has just been sent. opening 3 positions, risking 0.33% per trade. Remember, we entered our risk on our risk management of 1%. So we have entered 1% risk over this entire trade with a stop loss of 100 pips and a take profit of 70 pips. This is just an example. Obviously, as our VIP group chat, you'll have a lot more signals and you'll see a lot more information. This is just an example group chat that I have created and a example of what you will most likely see when joining our VIP channels. So that is as simple as it is. Each trade has the same stop loss, but with a different take profit. When TP1 is hit, this position will be closed. When take profit 2 is hit, this position will close. And finally, our take profit 3, this position will close. If for some reason we send in a message and it says close the trade now, all you want to do is hold down on the trade if you are using MetaTrader and you want to go ahead and click close. Accept the quotes and there you go. You are out of the trade. You can check your history to see the recent trades that you have taken. And again, we have our 2 positions open. That's as simple as it is. So upon a signal coming in, you want to have a look at the entry price, that's where the market will be. And then you want to enter your take profit values, followed by your stop loss, and then let the trade sit and wait for any other information or any other directions from our VIP channel. That's it. You're in the market. You just need to wait for price to hit the take profit or stop loss level. Pretty simple, right? Now I want to share a few tips to make sure you're getting the most out of these signals. Number 1, follow our risk management rules. Never risk more than 1 to 2% of your account on a single trade. Don't chase signals. If you miss an entry, wait for the next signal. Chasing usually leads to bad trades. Be patient. Not every trade will be a winner, but over time, following the signals consistently can produce strong results. Track your trades. Give a simple log of your trades to spot patterns in your performance. Avoid these common mistakes. Don't ignore the stop loss. It's there to protect you. Don't risk too much. Over leveraging can blow your account. Don't jump in late. If you're too late to enter, the trade might have already paid out. Now that you know how to use and follow our trading signals the right way, you're ready to start trading smarter. If you're not already a part of our signal group, what are you waiting for? Click the link below and get access to real-time expert signals that can help you trade gold with confidence. Don't forget to like, subscribe, and drop a comment if you have any questions about using signals. I'll be happy to answer them. I'll see you in the next video. Peace.